Imagine this. You wake up tomorrow, check the news, and the Canadian dollar has surged overnight. Your investments skyrocketing, your savings suddenly worth way more. But here's the kicker. What if I told you this could happen sooner than you think? And what if you're completely unprepared for it? Stick around because today we're diving into the burning question. Is the Canadian dollar about to surge? And more importantly, what does it mean for you and your wallet? Hey there, future millionaires. If you're living in the US and making financial decisions that could shape your future, this video is for you. Whether you're investing, saving, or just trying to figure out how to live that wealthy lifestyle you've been dreaming of, this could be a game changer. So grab a coffee, sit tight, and let's get into it. Section 1. The setup. Why the Canadian dollar matters. First things first, why should you even care about the Canadian dollar? I mean, it's not like you're using it to buy your morning Starbucks, right? Or are you? Cue dramatic pause. Well, here's the thing. The Canadian dollar, or the loonie as it's affectionately called, isn't just some random currency. It's a powerhouse in the global economy, and its movements can send shockwaves through markets. Your markets. Plus, let's be real. If you've ever been to Canada, you know their money looks like it belongs in a Monopoly game. But don't let the colorful bills fool you. This currency is serious business. Now let's talk about what's been happening lately. The Canadian dollar has been quietly building momentum, and there are some big factors at play here. Think oil prices, interest rates, and global trade dynamics. But here's the kicker. These factors are aligning in a way that could send the loonie soaring. And if you're not paying attention, you could miss out. Or worse, get caught on the wrong side of the trade. Section 2. The catalysts. What's driving the surge? All right, let's break it down. What's fueling this potential surge? First up, oil. Canada is one of the world's largest oil producers. And when oil prices rise, the Canadian dollar tends to follow. And guess what? Oil prices have been climbing. Coincidence? I think not. But wait, what does that mean for you? Well, if you're holding US dollars, a stronger Canadian dollar could make your trips to Banff a lot more expensive. Or if you're investing in Canadian stocks or ETFs, this could be your golden ticket. Next up, interest rates. The Bank of Canada has been hinting at rate hikes, and higher interest rates tend to boost a currency's value. Combine that with a recovering global economy, and you've got a recipe for a loonie surge. But here's where it gets really interesting. What if I told you there's one secret factor that could supercharge this surge? Stick around because we're about to uncover it. Section 3. The secret factor. What no one's talking about. All right, here's the bombshell. The secret factor driving the Canadian dollar's potential surge is, drum roll, global inflation. Yep, you heard that right. As inflation heats up around the world, investors are flocking to commodities, and Canada is sitting on a goldmine of them. From oil to gold to natural resources, Canada's economy is perfectly positioned to benefit. And that means the loonie could be headed for a major breakout. Think of it like this. If currencies were superheroes, the Canadian dollar would be Wolverine. Quiet, unassuming, but packing a serious punch when it matters most. But here's the thing. This isn't just some theoretical scenario. This could happen fast. And if you're not prepared, you could miss out on some serious opportunities. So what should you do? Section 4. The action plan, how to position yourself. First, if you're holding US dollars, consider diversifying into Canadian assets. Think ETFs, stocks, or even real estate. Second, keep an eye on oil prices and interest rate announcements. They'll be your early warning signs. And third, don't wait too long to act. Remember, the early bird gets the worm, or in this case, the loonie. Now I know what you're thinking. What if I'm wrong? What if the Canadian dollar doesn't surge? Well, here's the beauty of it. Even if it doesn't, you've still diversified your portfolio. And that's never a bad thing. But let's be real. The signs are pointing to a surge. And if you play your cards right, this could be one of the smartest financial moves you make this year. Section 5. The cliffhanger. What's next? Before we wrap up, here's something to think about. What if this surge is just the beginning? What if the Canadian dollar becomes the next big story in global finance? And more importantly, What if you're not ready for it? Don't be the person who looks back and says, I could have bought Tim Hortons stock when it was cheap. Trust me, you don't want that kind of regret.